We've got Petmin investing in this minerals exploration and development company in Turkey, which focuses on base metals. Why exactly is Petmin going ahead with this venture? What exactly are you buying into?
Well, basically, if you look at the strategy for Petmin, Petmin wishes to focus its activities into infrastructure-related commodities. And for that, specifically, we're looking at metallurgical coal, ferrous and ferrous-related, as well as copper. We already have operations in anthracite, a type of metallurgical coal. We have some interests globally as well as domestically in South Africa in ferrous. The one piece of the jigsaw puzzle that was missing was an interest in a copper project. And I was introduced to the possibility of this by the chairman of RCR, Alan Clegg, someone who I've known for many years. We had a good long look at the project. We did a technical, legal, political due diligence on it, and we felt that it offered us an opportunity to get a low-cost, relatively risk-free entry into a project that potentially we believe can add significant value to Petmin and help us complete the suite of assets that we're looking at for our investment portfolio.
Run us through terms of this transaction, because we're not looking at an upfront 17 million Canadian US dollars. We're looking at this investment being made in tranches, and that forming part of that low risk and cost effective entry, as you've mentioned. Run us through how you're going to be involved in these projects moving forward.
Well, first and foremost, we make an initial investment of 4.64 million Canadian dollars. That gives us just over a 10% immediate stake in RCR, and that money goes into RCR's treasury. But of that money, at least 3 million of it has to be invested directly into the copper project itself. Then after that, there are 4 tranches, each of $1 million, 3 million, 8 million, and then ultimately $5 million. But each one of those tranches, the payment of those tranches is dependent upon the preceding investment criteria of the preceding tranche being satisfied. So, in other words, if after the second tranche we have proven up both the project in terms of both volume of material as well as the grade, and it satisfies the criteria that we set, then that triggers our obligation to pay the next installment. So if at any stage we don't satisfy the investment criteria, then obviously we have the opportunity to walk away if we wish to do so. So it's a commitment to spend up to $17 million, which will give us 37.5% interest in the project, would make us an equal partner with RCR, the other 20% being owned by the Turkish local family. So it's a commitment to spend up to 17 million. It's not an obligation to spend it all. We have to prove something up before we spend the money.
Of course, we know that Petmin has in the past boasted a solid balance sheet with low gearings as well. So in terms of funding this transaction, are we looking at this cash up front?
No, as I said, the money goes in stages, and the actual funding for this particular project can be satisfied out of our normal cash flow that the business produces. Bear in mind that next year we'll have the second phase of our Somkhele anthracite mine up and running, so the cash flow will be up substantially next year over and above that which it is now, as we bring in the second plant, which will effectively double production coming out of Somkhele. So we'll add quite significantly to the bottom line of Petmin.